Hello everyone. Today we're going to be going over a couple of things that I have written down on my notebook, which includes the previous week's EOD, which I had made a video about on the Outlook, and a Friday trade recap, and kind of the reasons, the analysis behind it, but I won't go too in depth because that's more of a personal thing. And I'm going to be over the news calendar for Monday, July 15th. And I'm going to be going over previous week reviews. And this is going to be very brief, again, because some of the things that I do go over is very personal to me. Okay, so let's get started with the previous week EOD. So, so if you guys remember the Outlook, I made a video on it last Sunday, and I mentioned how I was guaranteeing a move into the this price range because it was the previous range's equilibrium, and we had a few arrays that I wanted to see get filled within this price level. So, um, if you want more details, you can go and watch that video. But we're here for the EOD, so let's move into it. So as you can see, the confident move lower played out perfectly. This move lower happened on Thursday's unemployment claims and CPI day, which I had mentioned was the day of the week that I was most interested in. So you can see how we have a couple of up close candles, followed by Wednesday's consolidation day, and then we had this huge drop lower during Friday. And I'll get into further reasons why I want to see this previous day price range get balanced, but it was mainly because news was the manipulation, and this whole move lower consisted of natural price action and just willingness to see lower prices. So usually when we have a 500-point range day like this, it does not stay unbalanced for very long. So here was the outlook, and here was the EOD, and I framed lots of trades on this EOD, which I'll be reviewing Friday's one. And yeah, that's it for the EOD, and you can connect this to the outlook. Like, I mean, I'm gonna be connecting this to the outlook of this upcoming week. So basically, how I'm gonna be connecting it is I'm gonna be having lower time frame assessments on how we balance this previous day price range. But I'll go into detail and on everything and how I'm gonna be connecting this into the next week candle is outlook. Okay, so that's the EOD. So let's move into the trade recap on Friday. Okay, so as you can see, the drawn liquidity was rebalancing yesterday's price range to approximately a 500-point move. Surely we aren't going to leave that range unbalanced. So this was my drawn liquidity, and it was a classic value template. You can see we consolidate after Thursday's big move lower, and we were not going to leave this price range here unbalanced. And this is the 4-hour, by the way. If we were to go on the daily, you can see how we completely fill out this entire candles range, leaving it as a rebalanced price range. So we consolidate, manipulate into the equilibrium, which was the level I had mentioned on the outlook. So this was the level I was hoping to reach in, and then here I would have my reassessment. So if we go into the journal, you can see how, oops, where is the screenshot? Yeah, so I was expecting a move down here, and then I was gonna have my reassessment So yeah, so again, it all depends on the research of how we move all the price arrays. So I was wondering how we would react off of moving down here. And this gives us a little bit of insight during Friday on how we reacted off of moving down to there. So after we move down into equilibrium with the range and into this imbalance here, you can see we had price fill out the entire previous day's range candle. So let me go back into the template. So as you can see, we have our midnight opening price, weekly opening price, equilibrium, and balancing the previous day price range. So accumulation, we manipulate into here, and then we distribute. And right now we are in the retracement phase of the AMD the retracement phase into this array here, which is my new price condition. So however we react off of this array here, whether we inverse it or we continue moving higher, and then you see anchor high, is the reassessment that I'm looking for. Let me note that down actually, so I forgot to note it down. The array lining as the retracement phase. The array is my price condition for the assessment at this period, but I have to add on. Okay, so let me say that again. So we have our accumulation, manipulation, distribution, and then we have a retracement and an expansion. The retracement is even here. So whether the expansion is going to reach anchor high or if it's going to reach lower. This is the retracement array that I have in the price conditions. If you inverse it, we can expand lower. If you respect it, you can expand to the anchor high. Okay, so using the by-day template, I had a trade idea that I had framed out. So what it was is basically off of the template basically. Before we got the retracement, I was looking for a retracement to the drawn liquidity, which was around 2670 level. So or 26. Around the 2685 level. So where is that? 2685 is around. Yeah. So I did call the drawn liquidity before it happened. So this is not all hindsight. There's obviously no way to fake this. As you can see, 10:27 a.m. July 12th. This is all anticipation. There is no way to fake this. And if I were to fake this, then I would be lying to myself. And I'm not trying to sell you guys anything. This is just for my educational recapping and cementing it into my head. And if you guys wanna watch my videos, you can watch them, take notes, or I don't really care. So let's get back into the video. So I was anticipating this move lower here to be used as a mitigation, since we are the classic by the template moves lower in a bullish trend or mitigations. So this move here lower induces sellers. We start to move higher, and then we retrace for these sellers to reverse positions to reach into the drawn liquidity, which was rebalancing the previous day price range. So as you can see, played out perfectly. Mitigation was created. The retracement happened a little later than I liked. So as you can see, we created a mitigation, which was this here. This will move lower, but then I can narrow it down to where it lines up with an inefficiency. So this is where I've highlighted. So yeah, so what I want to see is this creation and then move down lower, and then go to the balanced price range. Or no, not balanced price range, and then we can go balance the price range. But what did happen is that we expanded higher than I liked, and then we consolidated for a bit, and then we dropped down, mitigating these orders, and then this is where I got the trade framework. So as you can see, plays out perfectly, creates a mitigation, retraces, then more strong liquidity, creates the mitigation, consolidates for a bit, which I did not anticipate, and then we drop down to the mitigation and then we go to draw liquidity. So let's insane position. So let's move into the key level that I was anticipating creation and retracing to. So this is a bit personal, so you guys might not understand everything, but you can just connect the dots. So yeah, they retracing into the mitigation on lower time frame, giving the post axis and the mitigation sweep, and then we have a time-based equilibrium perfectly lining up with a price-based one. So we're right at it. Yeah, notice the position. Notice how the time-based equilibrium completely lines up with the price-based one. That gives you true equilibrium. So you see the time-based equilibrium is here. Price-based equilibrium is right here, feeding range. And then we get it lining up perfectly, which gives us true equilibrium, which is extremely high probability. So yeah, let's move into. So yeah, so we had the first axis point with the initial mitigation sweep, and I wanted a retracing to this new breaker, into this new mitigation. And then we can see first this, and as you can see, we had this big imbalance here, so I was not sure how we do react off it. So I wanted to take off any of my positions if I was in one. I had this array here, so I was not willing to put on risk while we were floating with a bearish array. So because what if we just respect it and go lower, and whatever happens, happens. So here, so as you can see, plays out perfectly. There's no way to fake this. 12:44 on July 12th. July 13, 15, 2022. There is literally no way to fake this. The position is crazy. We have the first axis. Off of the first axis, we create a mitigation block. And then mitigation block, I anticipated it to be used as a creation for another axis too. And that's exactly what happens. We had the first axis. We create this mitigation block, use the mitigation block as a formation for a new axis, and then we see the range high. Granted, we do disrespect the 5-minute array here. So if I held any positions throughout the array, it would have been inversed. But again, I'm looking for consistency. I'm not looking for the most profits I can get in one day. There's a quote that goes like, it's not about the hours you put in a day, it's about the days you put in an hour. So yeah, let's go into the trade. Okay, so lower time frame, 1 minute time frame, you can see the axis 2 that I was anticipating, which happened almost perfectly. That's where I traded my frame. That's where I framed my foundation off of. So as you can see, we have the mitigation sweep, and then we have the axis to creation, which again I anticipated. And then we have this singular inversion here with a bunch of low resistance liquidity. Looking back now, I took my profits at these two relatively equal highs right here, because I was worried that we would not have reached this high because I think it has high resistance liquidity. But looking back now, this was still low resistance liquidity because it was a failure swing. Of course, I'm saying this in hindsight, but when it was happening live, I had my take profit at these two relatively equal highs here, and when it was happening, I thought this was high resistance and then this was low resistance. So I was worried that maybe we take low resistance and then we just fall short of the high resistance and then we fall lower, especially because we had this 5-minute array there. And yeah, that was the inversion. So what you need to understand about to appreciate these setups is the foundations. The ancient model will show up multiple times, but it won't always work. Connecting high time frame ideology to low time frame tree setups is where precision is, connecting the daily draw to the weekly out. The weekly outlook to the template down to the anticipating a recreation and retraces the hardest part and takes the most patience. Entry vessel is really simple. So this was a really, really solid trade. And something that I like about this trade is that it is a complete mirror reflection of the previous trade that I took on my evaluation. So if we go back to here, this is my execution journals for my new evaluation. I have more journaling for trades on OneNote, but since I now want to move to Notion, I'm just going to be journaling executions that are stored for my eval and further. So yeah, so let's look at the trade that I took here. So you can see a bunch of low resistance, issue mitigation sweep, and an inversion. It's basically a opposite reflection of the trade that I took on Friday. So look, you can see here, low resistance, initial mitigation, inversion, and then to low resistance. So yeah, that was basically it for Friday. It was Friday was one of the best price action days. It was classic buy day template, and yeah, so that's it for Friday's trade recap. Let's move into the news calendar for the upcoming week. Oh, I don't know. Oh, a second. Okay, so I got the screenshot. Forgot to put it in. Okay, so let's go over it really quickly. Monday will obviously be no trading. As I said, oh, this is the wrong week. I was looking at previous week. Okay, here. This is the correct one. Okay, so let's take a quick look over it. Monday we have 8:30 Empire State Manufacturing Index, and then we have the Fed Chair Powell. So I'll be looking for trades within the 8:30 to 12 p.m. Clock like time segment, but I think this day will mainly be um, suited toward either lunch or PM or even both because um, I'm anticipating AM to consolidate to wait for the Powell speech. So I'm not gonna be looking to trade the AM, but if my system appears, then it appears. If it doesn't, then I'll be searching for it on the PM and during lunch as well. So Tuesday on core retail sales and retail sales, which is perfectly fine, tradable, 100% is great. Wednesday, yellow folder news, orange folder news. I'll be looking for trades, but I'll definitely keep in mind that it might be a bit choppy because of tomorrow's 8:30 unemployment claims, which again registers for the best price action in the world. So yeah, that's the best summary I can give you for the next week's news calendar. Let me type it down to summarize it. Monday AM is not anticipated to be the cleanest. PM would definitely be better for sure. Be better for sure. Yeah, so Tuesday, probably this option. Wednesday, okay, so that's the best summary I can give for the news calendar for a week of Monday, 7/15/2024. Yeah, Monday, July 15th. Yeah, that's basically it for the weekly calendar. Nothing really much else. So let's go into the day reviews, which I will be very brief with. Um, okay, so Monday, I was expecting no, I was not expecting. Okay, so we had this break of the range, and then once we broke the range, we retraced down to the previous range's equilibrium, and then within the equilibrium range, we had this mitigation block here, which we also retraced into. So you can see we have this kind of accumulation range here. We break above, and then we go into the range's equilibrium mitigation block, and then I had my intraday liquidity as the swing high that broke the range because this was my new price condition, and it seemed as we were respecting it very greatly that we were now to our intraday liquidity, which was the new anchor high, making a higher high to ultimately repeat the process and then keep making higher highs until the key level is met. As you can see, intraday liquidity was met. Previous range, take previous range high, retrace previous range equilibrium, meet the price area condition, and then at the price area condition, we can reach some lower time frames and catch moves that will take us to the new swing high if we respect the price condition. So yeah, after the intraday liquidity, we had the first axis, which formed at this mitigation block here. The second axis was anticipated to be created at a new mitigation block, which was the move down into the mitigation block, creating a new mitigation block that takes this high here. So anticipating a move down into it, a new axis 2, and then take out this range high again. And eventually we did create the axis 2. We created axis 2, and then off of this we had this inversion here, and I had my sell limit there, and I closed it by accident, because I was this was taken on a demo trade. This was a demo trade. It wasn't on my EPAP. I'm pretty sure I closed by accident because I was testing the stop loss with the buy orders. So yeah, so that anyway, we SMT the range high as we inversed it. So you can see, like, when we closed above it, this wick here SMT'd this range high here. So I would have been out anyway if I didn't cancel. But as you can see here, when we SMT the range high, we inverse the price condition again, and that hits me that we're going to be doing an IMS. And then once we do the IMS, we offered a lower time frame inversion that took us higher. However, we're going to put up a software break even because of rules. So let's go into Tuesday. Oh yeah, by the way, Monday was Monday no news with Power speaking because so it wasn't going to be the best price action. You can see it also the SMTs. Inversions being offered very late and things of that kind. So let's move into Tuesday. There's a money creating clean mitigation range gave us a good framework to work off of. Okay, yes, Monday was interesting. So we had this nice move lower into this mitigation block here, and that gave me a great framework and a great liquidity to reach for this range high. So power system ended up being around 30 a.m. Which then condensed into a 4-hour 10 a.m. candle gave me a more lower chance of reaching mitigation and price to this kind of to daily open market when I open price. Okay, so we have midnight opening price, daily opening price, weekly opening price, which we didn't meet until Friday. So I mean Thursday. So after tapping into this mitigation block, I was expecting a move to this range high, basically. It's clear on the entire so if you're not early, was tracing versus my eyes on the range high. Okay, so yeah, so my eyes are on this range high, and AMD retracement expansion manipulate, take previous bias, manipulate the mitigation, where we let the reassessment to go higher. So these reasonable trades again, and as you can see, we have here accumulation, manipulation, uh, distribution, retracement, expansion, and the expansion ended at the mitigation block that we have highlighted here. So they accumulate somewhere around here, manipulate, distribute towards the mitigation block, retrace, and then expand toward to the mitigation block. So yeah, I took two losses, which were demo, which looking back now, which went long during the EM session when I was living out and realizing that we were having retracement. I got paid by something that I already know. Low time figures are low time figures set up and high time figures behind one. But I did this for a while now, just enough to deliver to. But I use that attempt to line a bit for my highlights. Okay, so first one is this. I do not want to go through all of this, but basically, what happened was I was trying to long too early. First long was trying to long before we even hit our time frame beating your discount, which is a mistake that you can learn from. And I can tell myself that I know better not to do this. But whatever happened happened. Granted, we move on. The second one was once we were reaching to a high time frame discount, tried to long it, and it did not work out. And what happened after this is that we did get the array that I was hoping for. I was afraid that we were just going to reach to the mitigation, to the discount, and then not reach the mitigation and go higher. So a bit of FOMO, I'm not gonna lie. Anyway, we had the trade of the day after we tapped into the mitigation. So as you can see, when we tapped into mitigation, we got this 15-minute inversion. Off 15-minute inversion, you can see the mitigation block right here. We trace into it, and we take range high again. So here is where I can frame it. So here, so the inversion, mitigation, range, just to discount, tap into the mitigation, take range high, lower time frame setup. You can see the first access, and then we get the initial mitigation sweep, and then we get the lower time frame inversion with a failure swing on the IMS, which grounds high probability conditions, and then lower time frame there was this inversion entry vessel which we could take to range high. So I is on range high as I previously mentioned. So if you go on to trading view right now and let's go on the 8-hour time frame. Here is that same framework. So as you can see, we had this mitigation block retrace. I said my eye was on the range high. Range high met perfectly. Let me find it again. Here is our time frame, July 10. Where anything happened, there's no way to fake this. Mitigation block here, which is the mitigation block. I was on range high, and I was on range high, range high met. Doesn't get any more precise than this. So let's move into Wednesday. What happened on Wednesday was sorry about that. So let's go back into let's just go over Wednesday really quickly. Drawn liquidity is range high. After we take that range, I expect a smaller run high above it, followed by reduced mitigation zone, which is assessment point. Yeah, so I called this move here. We take range high, and then we go down to mitigation block, which is a reassessment zone, which I'll see if we are respecting it or disrespecting our time frames. with changes in state of delivery and inversions. As you can see, take range high, hit this usually trace down here into the mediation block, reassess on lower time frames, confirm that we're going to go higher. So as you can see, take range high, perfectly move on down the mitigation into this imbalance as well, and then we can frame this into lower time frames. So the 15-minute had the same framework as the 1 hour, so we go on to the 5-minute, and this is some more personal stuff, but as you can see, we get that vessel inversion, and that would have been a nice entry to take the range high. I did not take any of these trades on Wednesday, mainly because I had a maths test that I had to study for, and I also pointed out this market maker sell model, which I also made a video on. It was a video where I was live trading. I think I went over on the first thing on the video. If you guys want to check that out, I'll put it on the end of this video for like the end cards. And yeah, that's basically for Wednesday. So we're gonna go over these quickly because the video is getting too long. So let's see the day reviews. Thursday. Yeah. So Thursday I had some flaws in my technical analysis, but I resolved it once I got informed that. Anyway, what I'm saying is that I thought this was gonna be accumulation, fake manipulation, and this was gonna be the real manipulation into this mitigation block, and that would have been my assessment zone. So yeah, so basically if you take away the wicks, you can see that these bodies remain in the same range, and this is where the bodies started getting out of hand, started moving really lower. I anticipated this to be the accumulation manipulation to this mitigation block with the time frame assessment that would confirm the idea that we want to go higher and treat this as manipulation. But as you guys can see, that did not happen, and this was the distribution. So the reassessment that happened was actually a reassessment that confirmed that this was going to be a manipulation. And once I realized that, I took the trade I mentioned on Thursday. Okay, so after I realized that that was going to be distribution due to lower time frame assessments, I was able to take this trade with the same vessel as one on Friday. So yeah, you can see here the 4-hour one, the big drop lower. Reassessment showed that this was not going to be a. Oh yeah, well, I'm mixing it up. Yeah, okay, so the reassessment that happened here showed that this was actually the distribution and not the manipulation. I thought it was not. I thought that this was the manipulation because this wick here wouldn't have convinced me that this was true manipulation. I would have liked to see a close here to confirm this as manipulation. But what I learned actually is that on the intraday time frame, which is where most support and resistance traders will be looking, I asked myself if I was a support and resistance trader, would I treat this as a breakout of the range? And the answer was yes. So you can see accumulation, a true manipulation, and then a distribution. So that was basically it for Thursday. There are some more details, but I won't go into that. So let's see, Friday. Friday I went over it. Basically, I wanted to see the weekly outlook move into this range here on the daily time frame. We got it, as I called it on the weekly outlook. Though I not have it mentioned here. Okay, I do not have it mentioned here, but we went over later earlier in the video the outlook that I wanted to see the retracement to the daily discount. Okay, so with today's open take out the previous lows and time based daily open without a much advance with this price range. Okay, so I was basically saying that since we moved below the weekly open and into a leading range discount and into a mitigation block and imbalance here, I was anticipating for this daily price range to get rebounced. So that was my drawn liquidity. So anticipating by classic buy day, I went over this already in this video. There's nothing to go over it again. And I went over this future mitigation that I have here to my drawn liquidity, which of course happened, or if we had this move lower here, which did not happen, so there was no reassessment taking place. So the only reassessment that took place was the retrace into the mitigation block, which I was able to take a trade off here. Okay, so that's everything off my list that I want to go over in this video. So this is a kind of 3-to-1, 3-in-1 video. Went over the EOD of the previous week, went over Friday's trade recap, news calendar, and we went over the day reviews. So yeah, if you made it this far into the video, comment for value gap if you got this far in the video. Thank you guys for watching, and I'll make another video tomorrow, speaking about the 7/15/2024 outlook, which is the upcoming week's outlook. So I'll see you guys.